Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video. Today's date is February 16, 2024. It's Friday. We just had PPI data come out in the U.S. It was stronger than expectations. That matches the stronger than expected PPI data that we saw earlier this week. But we also, in between, had weaker expected retail sales. So one's stronger, that's a higher dollar. One's weaker, that's a lower dollar. One's stronger, that's a higher dollar. So we're seeing the dollar move back to the upside after moving lower yesterday off the retail sales data. What are the technicals saying? We'll go through that in this video. Let's look at the 4-hour chart in the euro versus US dollar. And what we saw, or what we've seen, is that the price yesterday moved higher off that, again, that retail sales data. This is the CPI data. This is a retail sales data rebound. We nearly retraced all the declines from the CPI. In any case, the price came up, and where do we come right up to? We came right up to the 100-day moving average. That's a blue line in this chart. Found resistant sellers against that level, and then the market rotated to the downside and waffled up and down in very narrow trading range and trading here today. Before the PPI data came out and pushed the price back to the downside, that move back to the downside is moving back down toward 1.07224 level, I guess. And that level corresponds with, recall, this high right here and this low right here and these two lows right here. And in between we went up and we came all the way back down. And then we fell below that level in trading this week and tried to hold resistance against the level before moving back above. And then we found support against the level. So we've seen a little bit of both in trading this week, and the price moved higher. And now we're coming back down, or we moved back down close to that 1.070224 level and found early buyers against that level. And we're currently trading at 1.0747. As you can see. So we're in between this key resistance up here. By the way, the 100-day moving average is now joined by the 100-bar moving average on the 4-hour chart and the 50% retracement. All those levels. This is just forward thinking, folks. This area right here is going to be a key resistance, not only today, but next week and going forward, because of all that cluster of resistance against that level. If the 50% retracement, by the way, is from the move up from this low right here to this high right here. So it's midpoint of that big, huge trend move to the upside. So be aware of that area up here. But down here we have the 22 level. We have the 61.8% retracement. And then those are two key levels as well that if we need to get below to increase the bearish bias, I will look toward this swing area down here between 1.0655 and 1.0675. Right now we're in between strong resistance, strong support, and we'll see how this all plays out for the rest of the day and then going into next week's trading. So be aware of that. We may just stay in between these levels until next week, where we try to figure out what's next. Let's take a look at the dollar versus yen. And the dollar versus yen moved lower yesterday off of the retail sales data. This is the hourly chart. And in the process, we moved below the 100-hour moving average and tested the 38.2. That's just of this last move to the upside here. We went a little bit below that level. We also went below this high price right here before the PPI or CPI data that pushed the price to the upside. So there was a little bit of a give to the downside here, but that momentum faded and the price started to rotate back to the upside. In the Asian session today, we traded above and below the 100-hour moving average and then spiked back to the upside, getting above this swing area right here. If I go to the 4-hour chart now and take a look at that, you can see what the importance of this swing area goes back to this area right through here, where we had a number of different, first a ceiling and then a floor against that level before breaking to the downside, and we moved above it on CPI data and came below it on retail sales data, now moving higher away from it on PPI data. We have this other area up here, and then the high price for the week at 150.87 to the target. And if we get above that 88 level and above this swing area up to about 74, the price would then start to look toward the high prices here, including 151.41, 151.71, 151.89, and we'll see what happens after that. But first things first, we need to get above the highs for the week. If this is going to go higher, the risk level right now is down to 150.04 to 11 or 14. I can't tell what that number is right there. But in this area right here, ahead of the key 150 level. If we go below the 150 level, then all bets are off, and we'll probably see further downside probing for the dollar versus yen. But until then, the bias remains to the upside. Let's take a look at the sterling versus US dollar next, and we're looking at the 4-hour chart. And Well, by now you know the 126 and 128 level in trading this week. We traded both below it and above it, but the last few days has seen the high price stall within the lower end of the 126 range, 126.02 to 126.13.7. To be exact, is the swing levels going back to this period right through here, and the high prices came in between those levels, not only earlier this week, but also later in the week, including today, and found willing sellers against that level. They are currently trading at 125.61, which is right near the 200-day moving average. That's a green line in this chart, which is at 125.62. So that's in play, and also this swing area, which I'm sort of, kind of in like with, not in love with. As you can see, the price has been moving above and below that level, but we need to get below it in any case, but below the 200-day moving average, and stay below that 200-day moving average to increase the bearish bias. Interestingly, this week, the lows this week have been persistently higher. So we need to do that and get through that level. And finally, we also need to get below the 38.2% retracement of this move to the upside. We tried to do it here and did briefly, but we haven't been down to that 38.2% retracement since. That level comes in at 125.25. If the price were to go below that level, then the bias would tilt more to the downside for the sterling versus US dollar. So watching the 200-day moving average right now as the barometer for both buyers and sellers in trading here today. There's a look at 3 of the major currency pairs. My name is Greg Michalowski from ForexLive.com. Good fortune with your trading. Bye-bye now.